Hello everyone. I welcome you all once again to another section of the Forex Beginners course. We are already nearing the end of this course, and I hope by now you are already practicing on your own. And if you are not practicing, I hope you are coming back to the course and learning as much as you can in case there is one thing or the other that you are not understanding or you don't grab. You can always rewatch the course. The more you watch it, the more you get it. If you always come back to it, there's always something that is always going to be clearer to you. So let's get into today's um, topic, which is technical analysis. So in the previous section, we already started it, and I showed you some entry types that we have, how we can enter the markets, how we can set our stop loss, how we can set our take profits. Now I'm going to be showing you on live charts because that is how you can truly get it. So it is showing you some diagrams and illustration is not enough, so I need to show you on live chat. So let's get into it. So in forex there's something we call top down analysis. Top down analysis is just simply doing your analysis from a higher time frame down to the entry time frame, which means the lower time frame. I'll explain again. Top-down analysis is simply doing your analysis from the higher time frame down to the lower time frame. So what does this mean? For example, this is the weekly time frame. So if you want to do your analysis, you have to come to the higher time frame because you always have to know what trend the market is in. You always have to follow the trend and try to catch the continuation. So according to this chart now, this is NZD USD and we are on the weekly time frame. So according to what I have on my chart here, one of the price patterns I explained to you is double top. So, and as you can see here, this is a top, and price tapped into it on the weekly time frame, and it's reversed. This is more or less a doji candle. Let me mark it for you so you can see. This candle here is a doji candle. And if you remember in our previous lesson, I already told you that doji candle is like a it shows it that there's low momentum and it shows that there is about to be a reversal. And one of what the things I told you about candlesticks is that where they appear it matters a lot. The area is where it matters. So and for the doji a weekly doji candle to appear in an area like this, it means the buyers are getting weak and they are already stepping out of the market, and there's going to be a reversal very very soon. And you can see that the next candle that followed it is a bearish candle. It is a full retrace. It retraced the two previous candles, so which validates the doji candle here that market is about to reverse. So once you know that the trend has changed on the higher time frame, then you work your way down the time frames to know how you can enter and take opportunity. So let's go to the next time frame, which is the daily time frame. On the daily time frame also, you can see that the market is already trending downward. That is, it is a bearish movement. It is already trending downward. This is what you can call a bearish market. Like I've explained in the previous lessons, we have a bullish market and we also have a bearish market. And I already told you that a bearish market is a market that is trending downward. Now this is already trending downward on the daily time frame. So then you go to the another lower time frame to see how you can enter and what is happening there. So this is the 4 hour time frame. So on the 4 hour time frame, you can see that from the double top, price has already completely retraced and come back downward, then you see that it created another high on the 4-hour time frame. Then you mark the high. Let me delete this and remark it. So you mark the high with your horizontal ray, then you mark it. The high means it is a significant place because price tapped into it and sold, then came back there and about to sell again. And like you have seen, price already sold from that particular high. So before, let's say this hasn't happened. So once you see a particular area like this, it becomes our point of interest or our area of interest. Let's go to the next time frame, which is 1 hour time frame. You can see in our area of interest here, this is a particular high. This is a particular high, and we already used our ray line to draw a particular the particular ray line there to signify that this we have an interest here. So, and if you let's go to another lower time frame, which is 15-minute time frame. If you notice, you will see that this is very similar to one of the entry setups I showed you in the previous section. So this is a double top, and then there is an ascending channel there. So what you can do is, since there is an ascending channel here, this is the first touch, second touch, third touch. Let me write it for you. This is one, two, and this is the third touch. So at the third touch, you can take a risk entry because this is a double top and price already got there structurally. So what you will do is you find a reversal candle and then you enter. So let's do that now. So we'll pick our short tool here, short position tool here. So you can see after the third touch, then there is a bit of a reversal here. So when the candle closes, then you can enter and then set your stop loss above the structure. You can see our stop loss here is 9.9 pips. And then let me also teach you how you can set your take profit targets here. You can set your take profit target 1, which is TP1 here immediately at the beginning of the correction, which is 61.3 pips. And for those who use percentage, this is 6.19%. So for example, the proprietary account I was talking about the other day, most of them calculate their profit in percentages. So this is a very good way for you to calculate your percentage. The TradingView app is a very amazing app and it is already calculated for you. So if you take this trade and you hit your target, then it means you have made 6.19%. But if you are calculating in pips, then it means your stop loss is 9.9 pips and your take profit is 61.3 pips. So this can be your take profit 1. Then your take profit 2 can be here, down here, because this is another point that price can react to. So you can set your take profit 2, which is TP2 here, so which is 83.6 pips. So that is how you can enter that particular trade. So let me clear this to make our chart neater. So I hope you understand this now. So what I also want to point out to you is there's another chance for entry here. Let me move this upward. So as price is progressing downward, you see this is an impulse. Then there's a correction here that you can enter from. So let us take our short two again and place it just below the correction. Then your take profit can be here and your take profit can be here. So if you notice, I told you that stop loss is an invalidation area where if price hits, it will take you out for a loss. So now imagine this type of price action. Price already came downward and then it reversed upward and then hit our stop loss. It means if you enter this particular trade, then price will take you out for a loss. So which is one of the reasons it is better for everyone to enter a trade very early. So when you enter it very early, you will be able to catch your pips, a lot of pips, and then set your take profit target. So I just wanted to show you what stop loss looks like. So now this is your take profit target. You can see price came back down to hit that target already. So that is how you can enter this particular trade. So from top down analysis, let me recap. Weekly time frame, there is a double top that we considered. Then we went to the daily time frame. Then we saw that it is already in a bearish movement. Then we went to the 4 hour time frame, and then we were trying to catch the continuation of the movement. Then we marked a particular high, so we waited for price to break that high and cause mass psychology. Like I've explained before, mass psychology is just the market movers trying to catch people on the wrong side of the market. So after the one, two, and third touch, we entered after a rejection candle on the 15 minutes time frame. So when we entered, we placed our entry at the reversal candle, then our stop loss was above the structure, and then our take profit was down the structure. Let us move to the next one, which is USD JPY. I shouldn't take much time on this since I already explained the basics and showed you an example. So we'll do top down on USD JPY also. From the weekly time frame, you can see there's a particular high on the weekly time frame. So price tapped into that high, created a mass psychology. It's tried to catch people on the wrong side of the market and then impulse back downward. So let's go to the daily time frame. In the daily time frame, we can see clearly that price is already in a bearish movement. It is already trending downward. So what we want to do is we want to catch the downward movement and make our own pips. So let's go to the next time frame, which is the 4 hour time frame. So in the 4 hour time frame, we can see there is a high here that price didn't reach. But as I've told you before, the market can be ugly. The market is not always neat as you want most of the time, and that is nobody's fault. So the market is just there to print information. It is up to you to interpret that information. So now the interpretation of this is that since price didn't reach that high, we can either wait for it to reach that high or look for another conference to enter the trade. So let's go to the 1 hour time frame. In the 1 hour time frame, we can see that after price reversed without reaching the high, after it reversed, it created a correction. So in that correction, let me delete this. Okay, in that correction, let's go to the 15-minute time frame to see this clearly. So this is it. In that correction, there is a double top and then a 1, 2, 3 ascending structure. So in that 1, 2, 3 ascending structure, what we are going to look for is a reversal candlestick. So after the third touch, price moved up a bit and then created a doji candle. Doji candle stands for reversal. And this is it has a fatter body. The candle body is fatter than a doji candle. So it is more or less a reversal candle. So when you see that candle, you can take your short tool and enter. Then your stop loss will be above the candlestick, above the double top, and then your take profit one can be down here, the beginning of the correction, which is 60.6 pips. And for those using percentage, that is 4.12%. And then your take profit two can be at the next point of interest here, which is the next low. This is the next low. So you can set that as your take profit too, and that is 189.1 pips for those using pips. And for those using percentage, this is 12.86%, which is an amazing number. So you can see how simple this is and how much you can make with this simple strategy. So let us move to the next example. You can see that even after price reach the take profit too, there's another correction here that you can catch. So let us enter the trade. You set your entry below the correction and then move your stop loss to the top of the correction and set your take profit below into the next low. So that is it for that particular entry. Let us move to the next one. So as price progresses, let us go back to the 1 hour time frame. Price created a big correction. This big correction, if you remember vividly, this looks like an expanding triangle. If you can remember vividly, you can see, like I explained before when I was explaining the price pattern, it was a bit narrow here. Then as price progresses, it began to expand. It began to expand. So how you can catch this trade is that this you can also put it like this. Yes, this is like a mini double top inside here. So this is like a mini double top, and you can also put the trend line to make it a 1 2 3 touch structure. So after the third touch, you will look for reversal candle. Like I said, I'm not just looking for any candle in the middle of the setup. I'm looking for it in some specific areas like the double top or after the rejection of the double top. So what I'm looking for is after this third touch, you are going to be looking for a reversal candle. So there is a reversal candle here which almost fully retrace the third touch candle. So let us enter. So you set your entry, then you reduce your stop loss to above the structure, and then your take profit will be at this low for your first take profit. And then for your second take profit, you can target this other significant low, which is here. And as you can see, price already hit that low. So for those using percentage, this is 9.06%, which is an amazing number. And for those using pips, this is 755.1 pips. So that is how you can enter that particular trade. So let us move to the next one. So again, as price progresses from there, it formed another big pattern. So let us move to the lower time frame. So in this pattern, after the first, second, and third touch, price moved downward. So when it's made the third touch, you can enter here. So, but I want to show you how you can enter again in case you miss the first entry. So if you miss this first entry, there's no need to rush. Just wait and let the market come to you. So there is a double top here. You mark this point. So, and when price tapped into it, it taps into it with a rising wedge, or let's say a mini ascending channel. So as you can see, it's created a 1, 2, 3 touch structure. Let me mark it for you. One, two, and then the third one, three. So after the third touch, you can enter with a reversal candle. Don't forget. So after the third touch, you can see the reversal candle here. So let us use our short tool. Use your short tool and then enter the trade. Oh, sorry about that. So your stop loss will be above the structure, and then your take profits one will be the beginning of the correction, which is here. Let me mark it for you to see. So that is your take profit one, and your take profit two would be at the next low. This is the next low on the 1 hour time frame. So that can be your take profit too. So for those using percentage, 23.45% is your return, which is an amazing ROI on whatever account you are using. And for those using pips, it is 562.8 pips. So you can see how amazing this is. You don't have to rush, just master the setup I gave you and then look for them on the chart. So you can see how simple and systematic the entries are. So now let's go to the third one, which is XAU USD. So we'll do top-down analysis on that also. Let's go to the weekly time frame. So this is a bit tricky because why I chose this example is there's a particular top here and price is trying to approach that top. So what we are going to do is that price is trending upward and we need to take advantage of that trend upward and make our own money or catch our own peak on that trend. So let's go to the daily time frame. On the daily time frame, you can see it vividly. This is a particular top. So and price is approaching it. Let us assume price is still here. So let's go to the 4 hour time frame. So this is the 4 hour time frame. So what we are going to do is we are going to be looking for correction to catch the next impulse. You know, I already told you that in this forex market, it's most in an impulsive and corrective phase. So this is the first impulse, and then what you are going to be doing is after an impulse, markets will definitely rest. It will correct. So your job is to try to find a suitable correction and time your entry to catch the next impulse. Now let's see how we can catch this one. Sorry about that. So for this correction, you can see it is already marked. Let me go to the 1 hour time frame for clarity. So this is like an expanding triangle. You can see it is a bit narrow here, and then as it progresses, it began to expand. So from this is one touch, two touch. So at the lower part, this is one touch, two touch, and then the third touch. You can also use your real line to mark it. So there is a mini double bottom here. Since we are trying to catch a buy trade, which means a trade that we want to long. So price broke the mini double bottom and then completely retraces on the 1 hour time frame. You can also refine it by going to the 15-minute time frame. I'm trying to look for it. Okay, I can see it now. So on the 15-minute time frame, you can see that there is a low test candle. So which signify when I was explaining candlesticks, I was talking to you about the areas. There are some important areas that the candles are very, very useful. So these are the type of areas. Now imagine a low test candle in the third touch of a correction. So once you see a low test candle, you should know that it signals a reversal. So after the low test candle, then you see a bullish engulfing candle, so you don't have to wait. All you have to do is just to enter the trade. So after the bullish engulfing candle, click on the long position button and then put your stop loss below the correction, and then your take profit one can be the first high here. So for those using percentage, this is 2.14%, and for those using pips, the take profit is 1234 pips. So let's check for take profit. So for take profit too, it is at the other significant high here. For those using percentage, this is 11.45%, and for those using pips, this is 6,616.7 pips. So you can see how amazing, simple, and systematic this system is. So it is very, very simple. What I want you to do is, with the illustrations I give you, and now I've shown you on the live chat the various type of entries and how you can enter them. I want you to go on live chat and backtest or check ways you can enter and go to um the major pairs and try to spot entries and try to catch them. So this is how it is going to be etched in your memory. This is how you are going to get familiar with the various type of entries that we have, and you get used to it. So this is basic technical analysis, guys, and you can see that the chart is very, very neat. There's no, it is not clustered. I'm not using any indicators. I'm just trying to catch the next impulsive phase just with pure price action. So you can do this also, and if there's anything that you don't understand, you can always come back to this video and rewatch it. So thank you, and I'm going to be um, talking to you in the next section, which will most likely be the final section. So thank you.